Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership and stories from across the globe. In today's episode, I'm joined by Kevin Smith, who's a non-executive director at Iris Metals, an ASX-listed company involved in lithium exploration in the historic Black Hills district of South Dakota in the US. They have one of the largest hard rock lithium landholdings in the US, and position itself at the heart of America's drive for domestic supply of critical minerals. In our conversation, we're going to explore how Iris is balancing exploration risks and surging lithium demand, and what sets the company apart in attracting capital and partnerships. We're also going to take an educational lens, unpacking the differences between obviously looking at other commodities and lithium exploration, and discussing the unique challenges of developing projects in the US compared to other traditional mining jurisdictions. Kevin's also going to share his insights on navigating the highs and lows of commodity cycles, advice for other juniors aiming to transition from exploration to development, and the broader outlook for lithium and the critical mineral space. So, with all that in mind, let's welcome Kevin to the podcast. How are you doing, Kevin?
Rob, good to be with you today. Thanks for having me.
No, appreciate your time also. So, as we always start these podcasts off, just wonder if you can just tell us a little bit about yourself, how you got into the mining industry, how your career's developed, to obviously current day where you're at now. So I'll hand it over to you.
Sure. Yeah. Thank you. I come to mining from the business side of things. Early on in my career out of university, I became a power trader, involved in the power trading business, did some oil and gas around that. And particularly on the power trading side, it was for a nuclear plant, which when the power markets deregulated, you had to pay attention to your fuel costs, and that was uranium and the price of uranium, and having to make a profit on that as we generated power. And I did that for a while, and then this company called Enron had a problem and blew up, and it sort of shifted a bit of the dynamic there. And I pivoted to the uranium space, and been in uranium a long time. But if you're a power generator, you're managing your oil, your coal, your gas exposure, things like that. And uranium was one that wasn't really being managed appropriately. And it's kind of a nexus of it's a mineral that's also an energy source and a fuel source, and that sort of got me into mining. And from uranium, I moved into other critical minerals and energy metals, and so. Lithium through the suite of battery metals, NCM, nickel, cobalt, manganese, into graphite for anodes, rare earths, and the doping agents that go into cathodes and anodes and things like that. And I spent a long time at a large trading house called Traxys, heading a lot of their critical minerals business and their growth into the battery sector. I've been in the lithium business now about 15 years. I've been through 3 boom and bust cycles in lithium already. I did my first lithium trade back about 2010 when the Toyota Prius first debuted, and people thought that was the start of what we would now call the EV transition. It was a little premature, but I've been in the sector a long time, and got to know a lot of projects around the world. I've been out to see a lot of the projects around the world, from brine to DLE to hard rock and clays and everything in between on different continents. And working at a trading house, you're essentially a supermarket for metals, and so your quest is to how do I keep the shelves of my supermarket stocked with metals? And so the mandate was to go out and look at junior developing projects around the world that would to actually deliver a product to market. And our mandate wasn't, stock flipping or something like that. It was, hey, what projects are actually going to deliver units to the market? Let's invest, let's get an offtake, and let's bring those units to the market and supply our industrial commercial customers. And so that's the lens that I come to the mining business with. And that took me to Iris. This was a project I had seen a few years back, and it has, I think, some unique qualities which we can get into as we move through the questions here. But I think it has a place in the supply stack, especially in the U.S., where there's essentially no lithium production and growing demand in a market that's relying on essentially 100% imports right now.
Yeah.
So good opportunity here, and that's why I've gotten on board and using my skills to try to move it towards production here.
Yeah. So I wonder if you can just give us a snapshot and overview of Iris Metals, so our audience knows, has got a bit of a background of the company.
Sure. So Iris Metals is an ASX-listed company with a brownfields spodumene development project in South Dakota in the Black Hills in the western U.S. This is a project that was what we would now call artisanally mined in the war years and the post-war years through the 1960s. The U.S. government actually got a lot of its critical minerals out of here, lithium. There's also some tantalum, cesium, beryllium, and a few other things in there that have gone into various DoD initiatives over the years. And it's a project that was sitting for many years, and Iris picked it up as lithium got more interesting here in about 2021 or 2022, and thought there was an opportunity to bring this project back online. Uniquely, most of the site has its production permits already. And it's a great permitting regime in South Dakota to work in. Spodumene mining is treated as essentially quarrying, like sand and gravel. So very low thresholds to get into the business, and kind of a unique opportunity set here. And in a U.S. context, there's not a lot of hard rock spodumene around. We tell people that we're one of one. There's some spodumene in Canada, there's spodumene in WA. Other lithium in the US is predicated on making a DLE, flow sheet work. Salt and sea, high temperature, molten salt from the ground, or you have clay projects which have very, very challenging flow sheets to them. So it's kind of a unique thing. We're using sort of off-the-shelf DMS that you would do you use in WA every day. So don't have a lot of technology or process to de-risk here. A lot of known quantities, and it's about bringing them together and executing on it.
What advantage does the Black Hills Lithium District offer compared to other emerging lithium regions? I suppose predominantly in the US.
Yeah, it's challenging. The U.S. in general is not known as much of a mining jurisdiction. You have sort of the four corner states, Arizona, Nevada, which have copper and gold and things like that, but there's not a lot beyond that in the modern era. South Dakota, the licensing jurisdiction is really favorable. There's a history of gold mining there. It's quite central in the U.S. You have a workforce that's welcoming these sorts of things. In the town of Custer, where our mining office is, there's quite a mining culture. Our local bar is called the Gold Pan Saloon. There's rock trading shops up and down the main street with very unique crystals and gems that people find out in the Black Hills. And everyone sort of has somebody in their family that's worked in the mining business over time. So, we found it to be a welcoming area. We're very cognizant of our neighbors and, watching how we do things, but being additive to the community and supportive of jobs and economic growth in the area. And I think we've been well received so far.
The company has built one of the largest hard rock lithium exploration land holdings in the US. How does Iris balance the early stage exploration risks with rising demand for US domestic lithium supply?
Yeah, there's essentially two types of ground that you can hold in the U.S. in which we have in our portfolio. You can have what's called patented or private ground, which we hold the license to on the projects that we're advancing rapidly right now. It's all on private ground. And then you have public ground or BLM ground, which we do have a large quantity of claims on, but there's a more involved licensing and permitting process to get on the ground there. So we are focusing on the brownfields restart of projects that are on private ground where we have a license or can get a license quite easily and can be in control of our outcomes more readily. And we've highlighted a path to market that's quite quick compared to most mining projects. There's a great slide deck on our website if you want to check that out. It shows kind of the timelines, but restarting brownfields hard rock spodumene that's outcropping at surface. We just did a test mining event recently to prove up our costs and things like this. So we went in an afternoon. We mined 40 tons of DSO spodumene, all bagged, big bagged, ready to go, and it's off to labs for testing, met testing, flow sheet testing, and some to other stakeholders for qualifications. But really easy to do. It's like I said, it's outcropping at surface. We think we have a very low strip ratio in a lot of areas. We have a 1-to-1 strip ratio. And we were even able to mine with bulldozer and backhoe and without any blasting, which is quite significant as well. So the path to production is approximately 18 months from here is what we've outlined in our slide deck, and that takes us through some more mineral delineation, proving up our resource. You can see the resources there, but it wasn't done to a JORC standard. So we're going through and doing the drilling now to prove up our JORC resources. Doing the met testing. We just did the test mining to prove up the economics of our project. And we're filling in all the boxes you would want to fill in on that, on an economic study, and working towards an FID here, hopefully in Q1 of 26. We'll take a positive FID, and we've got approximately a 12-month time to market from there. And that involves some modular DMS equipment. There's going to be multiple mine faces in a hub and spoke model, feeding a central plant. There's great infrastructure that we can leverage here. So when you think of all the things you need to bring a mine online, we have it all, almost turnkey, ready to go here.
As a junior explorer on the ASX, capital raising and investor confidence are obviously crucial. What do you think sets Iris apart from other lithium juniors in attracting investment and partnerships?
Yeah, it's a great question. We just did a capital raise. Unfortunately, lithium price is down, so it was a down round for us. But trying to keep moving things forward here. As I said, we're one of one. We think that we can be the first and the largest lithium producer in the U.S. to come online here before the end of the decade. And we can scale and ramp to a meaningful quantity of lithium supply that moves the needle in a domestic context. And so we stay focused on that. That's sort of the North Star, so to speak, that we're executing against. We would love to have a stronger price deck in the lithium market, but we're continuing to head towards that goal, because you can see the supply demand is going to catch up here. The next cycle is going to swing, and we think it will be in the right place at the right time as we're coming into production. The cycle will have rebounded and recovered here, and we'll be able to execute on that. And when you look at the other competition, the peers that may come to market, they're all out in the 2030s and beyond. They're $500 million or $1 billion in capex away from building a plant, and we don't have any of those hurdles ahead of us. So we think we have all the cards you would want to hold. And looking at evaluating a project, we feel like we're holding those, and we're just proving them up from a JORC standard and in our third party, confirmations from consultants and qualified people so we can say it, more firmly. But if you go out there, you can see lithium outcropping all around our site. We can go up, we can mine it by hand. You can pick it right off the wall and take a souvenir home that way. So I think it's a compelling story, especially when you look at, we have a great slide that we show investors, and it is in our slide deck on our site. There's a map of the U.S. with all of the 20 odd battery plants, EV plants that are under construction now. There's something like $25 billion in different plants under construction there that essentially ring us in the U.S. And there's no domestic source of lithium. It's a captive market entirely dependent on imported lithium. And in the current, geopolitical climate we're in, tariff climate that we're in, we are on the right side of all of those things. We've got very supportive, government interest here. We've been hosting some people at site. So we're confident that we're doing the right thing in the space right now.
The US is pushing hard for critical mineral independence, as I suppose many other countries around the world. From your perspective, what are the unique challenges, regulatory, or obviously permitting, community, in developing projects in the US compared to other countries around the world with a similar mission?
Yeah, it's having been in the mining business for 20 odd years. Whenever you would try to raise money or talk to investors about mining, it always involved either the TSX or the ASX. There was not a lot of NYSE or NASDAQ crowd to talk to, and that has changed, and it's growing. And I'm always surprised. I live in the greater New York area, finance capital of the world, but historically not for mining. But the quick proliferation of people interested in the sector, directing money and investment into the sector, the way the government has mobilized to support things in the space, I think has all been positive. And so we're capitalizing on that. We're getting our story out to people. I think we're being listed on the ASX with a project in the US. We have had to work a little bit harder to get the message out to a US audience. That it's a US project here. We are thinking about ways that we might increase our visibility there through a US listing of some kind, to increase our our ability to reach investors in our home market. But generally things are going good. I bring a lot of relationships and investments and partnerships from my experience in the space, and Rolodex. We've been hosting people out at site and have some good interest, because if you're a large multinational, you're investing $2 billion in a plant in the US and your raw material supply chain is entirely imported, you want to try to de-risk that. And it's a conversation that these people want to have, and we have a lot of interest there. So we feel like we'll have a ready customer base, great ability to monetize production here in the near term, irregardless of what the sort of the macro lithium story is. We don't need to outcompete a WA project. We don't need a bigger resource, a higher grade, or something like longer mine life than a spodumene project in WA. We have a unique opportunity set, a captive market in audience and customer base, and we're one of the few people that can deliver and execute on that. And I think that's what's special. That's the message we're getting out to investors and in the government, and we're getting the support to move forward on that basis.
You mentioned in the introduction you've been in the industry for 20 years, and obviously there is a long history of cyclical booms and busts. What lessons should investors and young mining professionals keep in mind when looking at the current lithium super cycle?
Yeah, that's a great question. You know how I think of it is, lithium is an immature market because it's a product that has not been widely used or adopted in industry like copper, lead, zinc, base metals have, that have a maturity an established, operating base and annual consumption to them at an established supply demand balance. Lithium is new. The applications are new, whether it's EVs, portable mobility devices, grid scale storage, military applications, things like that. All these are new. And so your demand case is expanding at the same time the supply is expanding. And there's that demand sends price signals. The supply side responds to that. I think sometimes the way I think of it is the supply and demand leapfrog each other periodically. I think both charts are ultimately going up and to the right, but the timeline to build a battery plant is different than the timeline to bring a new mine online. And so these things maybe trip over each other from time to time, but ultimately I think the growth is there. You can see it. And that's how I would view it if I was an investor, the lens of, but I think buying the dip is the best opportunity here. We're below most people's, cash costs here, never mind marginal cost. The price has to go higher for any of these industries to exist. You need more lithium, and that will bring more demand, higher prices, and the market will reset here. And so I think it's a great time to be in the space. We're looking at, obviously, where we would fit on that cost curve. We feel like we're at the right part of the cost curve in the U.S., given our mining, kind of the attributes of our project, that it is brownfields, that it is outcropping, that we've got infrastructure nearby. We don't have to build anything there. So, our workers can live at home, drive their car easily to work in a relatively easy commute, work, go home. We don't have to build any camps, fly in, fly out, seasonal operations, hard transport issues. We don't have any of those things. So, we think that it's a great opportunity, and the time in the market, the price can't go any lower here. People have shut in production, people are delaying projects. You can see the market's resetting here.
Yeah, and I wonder if you can, I suppose moving on, wonder if you can just give us an overview of the lithium market at the moment. You probably had highs a couple of years ago, and as you mentioned, we might be at the bottom now, or close to the bottom, or just coming out. I just wonder if you can just give us an overview of the lithium market globally, and how you see it playing out for the remainder of the year going into next year.
Yeah, the lithium price through those cycles, it's gone from $3,000 a ton to $90,000 a ton and everything in between. In this last cycle, back in 2002, it peaked at around $90,000 a ton, lithium carbonate, and fell all the way to $9,000 a ton. So about a 90% drop in price. It's been painful. Everyone in the sector, share prices have all mirrored that fall in the underlying lithium price. But, that brings some discipline. Marginal projects have been shelved and delayed. And, there's been a refocus on costs and who can compete on cost here. Obviously, African, Chinese sort of sources have continued to flow. Lepidolite-based lithium has continued to flow. South American brine has continued to flow. But, if you look at, I guess back up from a high level, you can get lithium from a couple sources. You can get traditional brine from South America and the salars up in the Andes, which is where your legacy SQMs of the world get their lithium from. And then you have newer projects. You have DLE projects, which is direct lithium extraction from oil wells or brines or some subsurface salty sea. Or you can do, or clays is the other way. So you might have like a Lithium Americas Thacker Pass out in the western U.S. that got some government funding to it. Those have more challenge flow sheets to them, where you have to mine a lot of clay, essentially old volcanic sort of ground that you have to mine. They all have different cost profiles to them, and where they fit on the cost curve, who's doing it, what kind of jurisdiction comes into play there. The lithium price did get a bounce. The Chinese actually, I think, reached a pain point a few months back and shut in production, domestic lepidolite production in China, which brought around about a 15 to 20% rebound in the lithium price in the space of a month. So you can see there's not a lot of swing supply. We are below cash cost for most people here. So if you're going to have any of the supply that's required, if you get EV penetration gets above 20% in a Western context, grid scale storage, starts matching the forecast there by the end of the decade. There's not enough lithium to go around without a substantially higher price. You need that higher price signal if you're going to bring this lithium to market. So I do think it's set up. The spring has been compressed here, kind of from a bearish perspective, and now it's ready to rebound and recover and deliver, more units to the market off of a higher price base.
With someone that's got a board and operational experience, what advice would you give to a junior mining company looking to transition from early exploration to becoming a development company without overextending?
Yeah, I think, it's the lens I went around with from when I was at a trading house looking at mines to invest in for offtake. The boxes I would look to check off are, jurisdiction, permitting regime, proximity to market. Do we need to build, a 500-kilometer highway? Do we need to bring in power, gas, things like that? What's the downstream processing look like? What are the transport routes to market? So, that's on top of grade and resource and ease of mining and mining techniques. So I think it's a kaleidoscope of all of these things you need to be in that sweet spot. And, I would say there's a lot of resources deposits that have been found. In lithium, I don't think it's the time to go do greenfield exploration. I think it's a time to look at, the projects that have been found, the resources that have been found, and say which ones actually have a pathway to market in a reasonable time period here. And, maybe there's some consolidation that's required to make that happen and create a center of gravity in a certain area or something like that. But I think that's really the lens to look at if you're trying to advance a project. Yeah, I don't think it's greenfield exploration is not where we're at in the cycle right now. It's what you've got that you can bring to market in an economic manner in the near term is where the opportunity set is. And, I think what's unique about Iris, we have that exploration upside, but at the same time, we have near-term monetization because of our quick path to market from the restart. We get kind of the best of both worlds. So you get in exploration, you get the potential growth in NPV from exploration upside along with near-term monetization. It's not some spreadsheet calculation that's years away, end of the decade. We're year and a half away from cash flowing here. So it's a unique opportunity set.
Yeah. And lastly, what's the outlook for the next sort of 6 to 12 months for Iris Metals? And is there anything else you want to share with our audience?
Yeah, we've got, we're doing some drilling. We just announced another land acquisition a few days ago. We bought the Ingersoll mine, which is another prior producer on private ground nearby our existing portfolio. So that expands our footprint in the Black Hills by a third or so. So quite substantial for us. We'll be coming out with more drilling results and resource statements on 3 projects between now and the end of the year. That'll substantially increase our reserves that we have from a JORC perspective. We've got the economic analysis ongoing, the MET testing ongoing, all in parallel, and going to arrive at take an FID investment decision by the end of the first quarter of 2026. And then we think we have some good government support, some good commercial support from large strategic partners that will allow us to have that bankable offtake that we need and allow us to go into production with about a 12-month build out and a chance to cash flow by the end of 2027, very early 28, something like that. So really good prospects. The news flow you would want to see as a junior progresses up the value curve towards a producer, and we've got all of those things. Executing in parallel. It's kind of a unique scenario to have I had not appreciated till I came on board here. Usually you do exploration, you find a project, you have to go apply for mining licenses. It takes years. It gives you a chance to do a lot of your testing. But when your brownfields restart and you already have your mining license in hand, you already have your sort of the green flag to the race has already got out there. You try to do everything in parallel at the same time rather than sequentially, and it is a tremendous lot of pressure to execute like that. But that's what we're doing, and I think doing it quite successfully here. And we just had a funding round that gets us quite a way towards those goals here. So we feel like we're doing pretty good right now.
Yeah, Kevin, thank you very much for your time. Appreciate you sharing your story, telling us about Iris Metals, what you're looking to achieve, and obviously giving us an overview of obviously the US in terms of critical minerals, and giving us an overview of the lithium market. So if our audience wants to reach out to you, if they want to follow the story, ask any questions or advice around the lithium market, how can they go about doing that, and what social media platform channels are you on?
Sure, please. Yeah, look me up on LinkedIn, Kevin Smith, Iris Metals on LinkedIn, and happy to have some follow-up conversations with people, help them understand the story, answer a few more questions in more detail, and understand kind of the lay of the land in the space and how we fit into it.
Yeah, great. Well, we'll include those all in the show notes that accompany this episode for easy access. So wish you all the well for the remainder of the year, and perhaps you want to come on next year and give us an update.
Thanks, Rob. Good to be with you and your audience, and have a good day. Look forward to staying in touch on things.
Yeah, thank you.
Thank you. Thanks.
Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Lithium has been, I suppose, in the doldrums for the last few years, but I think I'm hearing more and more that it's slowly coming back online now. So obviously watch this space, and please share this episode far and wide. Thank you for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.